Good afternoon and welcome to the Blue Line Metals Edge here for Thursday, September 15th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching us on YouTube, be sure to like and subscribe to our videos. If you need additional information, go to bluelinefutures.com or send an email to info@bluelinefutures.com. If you like any of the reports you see in here or any of the charts, I can always email those out to you. So getting into the markets here today, looking at the precious metals, all of them are under significant pressure. We saw gold break through that critical level of support. You can see 1685 is held basically over the last 2 years, and once we crack through there, the floodgates opened with a lot of stop losses being triggered. We washed down to about 1668. We've got a small recovery coming back, but it's in the after hours here as that market's closing up, so the volume's a little bit thinner. We're probably going to start looking at call options going into farther out into the end of the year, if not into early spring of 2023. We know that once the Fed pivots and goes from this hawkish cycle to more of a dovish stance when the bottom's in and they get inflation under control, we'll probably see this recovery, not only in the precious metals, but also in other risk assets. Get into the report we sent out today. If you like to see these probable ranges, or if you like a refreshed range, shoot me an email. We'll get that out to you. If you're using the different strategies here, you could see that the trend following system has been short on gold, and it's been short since the August 22nd settlement up around 1748. That was when we got this initial breakdown here. And since that point in time, you can see gold signaling a lower high on the charts and now making a lower low. The widening of DMI minus over plus confirms that we're on a bearish trend at the moment, and you're going to see stochastics go back into oversold territory. Remember, that doesn't mean that it's oversold. That just means that we're in a bear market. What you don't want to see is this ADX turn and strengthen up like how it is right now. That's going to confirm that this downtrend is starting to strengthen. Getting into silver, similar play right now. It is breaking down. However, it's been a little bit better than gold because of the fact that it's interconnected with a lot of these key themes that are driving the market, such as redoing the electric grid, building more solar, and working on that battery technology for those electric vehicles. So you're seeing all the platinum, palladium, silver, copper, they're all performing much better than the gold market. And you can see here with this gold-silver ratio that it peaked at 95-1. Now it's starting to come off to the downside. So we'll probably see this ratio start to consolidate right around this 50-day moving average, right at 82.76. Looking at a couple other markets here today, we've got crude oil futures under significant pressure. A lot of the discussion with that is you've got a typhoon that is making landfall in China. Remember, China is one of the largest consumers of crude oil, and that demand's going to come off significantly. Something to flag and keep an eye on is this CME's Fed Watch tool. They've got it at a 78% chance of a 75 basis point rate hike. The 50 basis point rate hikes been completely taken off the table, and now there's even chatter of a 100 basis point rate hike. Although I don't think that the Fed is going to go that route at all. I think that might be too much for the markets, especially with crude oil and other inflation areas coming off. Going out to the November meeting, you can see that they do have another interest rate hike all factored in. I believe that it's going to be a 50 basis point rate hike. That's kind of what the way the direction is going and the way this shows. So if you got 75 basis points to bring it up to 300 to 325, you go to the November meeting, you can see that it dips up to 375 to 400. So that's going to be either a 50 or a 75 basis point rate hike. Looking at some of the economic data that's coming out, if you go into tomorrow, we've got mostly everything that's overseas, and this is going to be a big market mover here at about 4 in the morning. You've got CPI coming out in Europe. It's probably going to show a hotter number, and if it does, you're going to see the euro probably firm up on that. The dollar will weaken. That'll give some reprieve to that gold market and allow it to rally back just a touch here. If that number comes out softer, the problem you're going to see is that the euro will weaken, the dollar is going to strengthen, and that could have some additional liquidation on gold. So be ready, have some stops working on there. If you don't like stops, you can always use put options or call options to protect your position as well, perhaps as a temporary hedge. If you need any other information, give us a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.